All right, guys, time for a little recap. I'm a little bit under the weather, so if I sound funny, coughing, please excuse me. Got a little sickness going on. We'll be over it shortly. But let's get into what I didn't get to recap here. Now, our final targets from last week, right? We had a break over the 430 as long as we held over 430 and the 3820 if you watched our last video. I'll link it in the description below if you missed it. But 3820 was the golden Fibonacci and target for me on the last few weeks. So if you've been following along for the last few weeks, I said 430. And then when it comes up to the 430, we're going to make a decision. It's going to be a squeeze or a rejection, but it's going to be at that point. So if you were playing with us way back down here, anything over 417, we're calling 430. Right here, this weekly Fibonacci was huge. So from 417, we were going to move to the first hit of 1618, which is the daily bottom gap up that we had on the Friday, which was 425.31. And then we refibbed out and we made some 430 targets, excuse me, off of really, really big Fibonacci's. If you look to the left there, this monster, 3820, huge target. We had a secondary 1618 from a daily Fibonacci because we love to overlap multiple levels that are going to be key points of interest right here. So you got a 1618, a 3820, and the weekly deviation, right? So look at that weekly deviation, a big solid dark yellow line there, over and over and over rejecting. So we said 430 is going to make a choice, right? We're going to come up to this 3820 gold level, and that's that gold level right in between the two white levels, and it was going to make a choice. It was either squeeze back out, or we were going to go to our final target, 431.44. That was the last Fibonacci extension we had, 423.6. That was the last piece of the puzzle that we could possibly go to extend to the upside from last week's Fibonacci measurements. And we did hit that. It squeezed the 3820 and moved right to there. I know a couple of my team members here grabbed that short. And we had an opportunity, a really good opportunity here to actually follow that down a little bit back to those 430 tests. So let's take a peek at that real quick. So here, lower high, and then you notice that track all the way back down 3820, right? So we squeezed it right out of the gate, and it was a gap because we shied it, and we talked a little bit about shy levels this last week here. So if we could dig into those candles, get real close here, that 3820 gold right here was never hit. That's the pre-market candle right here, and that's the live candle right here, okay? So it had to magnet down and come back to that 3820 for a sensible hit. There's no other way to look at it. So when it flew up there, it hit my target of the 423.60, which is this green line here. That was the end of the road. And what did it do? It created a nice lower high. You see the RSI, TTM, and MAC all swapped to the downside for a back test. So once the long target is hit, you can look at that as a short entry a lot of the time. So move around back down to the 430, consolidated, and what did it do? It just chilled out. Now, in the psychology that we're sitting in right now, so let's move into Monday's partial recap here, what we talked about. Every single long target is not necessarily a short entry when the psychology is based off melt up. Because right now, the psychology that we're dealing with is melt up. It's just FOMO, up, 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 up. Shorts getting blown out of the water. We went from debt ceiling, oh, the woes, oh, the China, oh, the BRICS, to nothing matter. Look at the PE ratios. Look at everything going crazy. Now, we're in extreme greed right now. We're very, very, very greedy. Extreme greed, whatever it is. Yep. Right now, we're still forcing up, which doesn't matter because longs can stay way longer delusional than you can stay solvent in your short, right? And that has been a huge know-how of the market. So just because it hit a long target of 423.60, it doesn't mean it's an easy short. Friday over here, obvious short, right? End of the week. People are going to be getting out of the positions for the weekend just in case we get crazy news, expirations on Friday. That short makes sense, but does today's short make sense? No, that's completely different psychology. Monday morning leading into CPI and Powell, that's the next jam, right? So when we have 423.60 ending Friday, and we had this short move here, then we come into the next day, and melt up is still the psychology of everything in the market right now. We have not had a catalyst that's going to slow that down. And all we've had was throwing away the debt ceiling, tossing that out, and speculation of Powell coming up for Wednesday. So that speculation is going to be driving that market. And we are going to get those CPI numbers tomorrow. So if the print, I think we have 5.2 on core, 4.1 on headline. If that falls tomorrow and inflation comes under that, we are going to most likely price in that pause and or skip. Inflation comes over 5.2 or 4.1 headline, we are obviously running hot. And that would price in a hike instead of a pause skip, right? So whatever those numbers happen to print, we are obviously leaning a little bit to the melt up side as we've been calling for 2 weeks. Check the videos. That is most likely what you want to see. Now, we'll get into a couple just ender targets here, whatever's going to happen for the CPI. 436, okay? This is a weekly Fibonacci 2618. I don't see us too much higher than this. And then if we get a little bit higher than that and we keep the FOMO drive on, the absolute last extension I have before a decent pullback is going to be 439. These are the two targetable points of interest now that we have moved up. I don't necessarily think this is going to be easy peasy, but I do believe that if this, whatever happens to print, right, coming into Tuesday and Wednesday's data, that's going to be the driver. If it comes in a little hot and we get that hike, this 2618 is going to become resistance. That sucker is going to drop us right back down, go to 430 and potentially lower, and we're going to start chasing down some of these daily gaps that we left. If not, the euphoria and absolute, dementia of longs here that they have, absolute insane, is going to keep melting up into trend line here that I have. This is a really old historical trend line, and or a delusional +2 standard deviation on the daily. I mean, that's higher than both targets. We're talking up to the 450s, which is possible. We just have to see what happens. We don't have any indicators slowing down. And one thing we did talk about in the last video is once we start getting over hot on the daily, this is a daily chart. Look at the RSI. How many times, is my fat head in the way down here? Nope. Do we see the hot and cold on a daily? Okay, pay attention to this. Hotting, okay? When's the last time it hotted? Coincidentally, very close to when they started hiking. Wink, wink, okay? Cooled right here. Right before it put in the 52-week low, or, what do we get? Yeah, last week's low, or last year's lows, 348.11. We're getting hot right now. As you see the daily indicators start to wipe here, okay? You're going to see the MAC break down. Just because it hots once doesn't mean anything. If you look directly up on these lines, right, vertical, we were starting to get hot here, and it ran for another 2.5 days, okay? 3 days-ish. When it got cold right here, where's our low? Right here, it actually did one more fresh low. That was that huge gap down scam candle. We bought this out of this. Yeah, I loved this one. We actually hit that bottom to the T. So this right here, just look up, right? Here's your cool. Here's your higher low RSI. RSI showing divergence and went. So this was all a very good buy zone. Now, just be wary. There's no indicator that rules them all, but a daily charted hot and cold RSI, it's massive, boys. It's massive. Excuse me. So remember, it can go higher, so don't just assume it's down, because if those numbers are hot and, again, the markets can stay much more irrational to the upside, then you can stay solvent on that short. So if it does go up a little higher, let's say, again, 436 and 439, let's just round up by 4 cents, those are going to be two targets. If we stay under this 2618, which is going to be 433.44, we will be coming down all the way back to sub 430 levels, and most likely 428, way down here by that 100 fib. And if we keep crashing from there, we will chase down these delusional gaps left on the chart. We have one huge one right here in the 424 area. I think we have one more quite a bit away yet. Oh yeah, so far away, way down here. So the last big gap, 396.70. Now, not all gaps have to fill forever. I think there's a couple pandemic lows way back when that had never filled the gap either, which you never know. So pay attention, but they might. But at the rate this is going and the technicals that we are giving, we are kind of shifting to that melt side. It's getting a little crazy here, because even if it does want to continue, which I'm fine with, it just can't go in a straight line forever. So historically, let's go to this one little piece of information here. Excuse me. Oh, dying here. When we go to bear market to bull, so let's say, we have this correct and we came all the way down to here. And we had a bear market for many months, right? We sliced 27.5% to the downside. Once we came out of the bear market, right? Top down here, and then we have raised back up 14%. So again, a over 20% retrace from bottom. We were out of it right here. So anything over 418.40, hypothetically, there is no more bear market. We're into a bull market. We don't tentatively do well 2 to 3 weeks after we push back into that bull market. So pay attention to that. And again, anything can happen. Just leave it in the back of your mind. That's not a trade call for 5 minutes from now. It's not a trade call from a day from now. It is something in the back of your head going, okay, well, watch the delusional longs push up maybe a week or two, right? And then get ready, because that daily RSI, insane, right? It's obviously just as crazy as the weekly here. And this is something to ignore here. So if you are talking about listening to me blab about RSI and you see the overhot and you're like, but Brandon, look at this thing, it overhotted over and over and over and over. Yes, that's the slingshot that came out of the pandemic, was a fabricated injection market, quantitative easing. All they did was print money to the oblivion. So this does not matter. That was a free market. We bought every single dip on the 50 SMA daily and made retarded amounts of money. Okay. So trust me, daily RSI. So if you chuck back down to that, pay attention to this. We are getting pretty hot here. And if that stays hot and wants to push up a little bit, that's fine. We are getting above the deviations that are very dangerous up here, +1 weekly. So again, just to reiterate one more time, if you guys forgot, if you go to the 1 day, 1 year right here. And again, now we can see both deviations here. Let me get to a cleaner chart. Clear this up. So this deviations chart just alone, we usually do not get outside of that +1, -1 without extreme catalyst, right? Oh, the frick. Now, let's shrink these bad boys. We know what the RSI looks like. Deviation lesson here, real fast. Both of these are 1 year, 365 days back from consecutive day here. So 360 days from today, 365 days from today. If you look at this, +1, -2, super rare. Right here as well. Daily, -2, very rare. Weekly, -1. And again here, weekly 1, daily 1, weekly 1, daily 1, center, center. Now you look at the dailies right here. We're up that +1. Very rarely do we FOMO out to those two. It only happened once in the last 2 years. On a yearly trade, you have to keep taking pictures and move it, so on and so forth, because you only can have 365 days of bars on here, 365 bars. For the deviation to calculate like this. But since we're at that +1 mark here again, now following that lead up, we got some gaps to fill here and here. So again, it doesn't mean we're not going to go see all-time highs and FOMO to the upside. It just means we may get a pullback catalyst from here somewhere into that, somewhere into this half deviation or +2 even. Let's say CPI is very cool and it comes ripping into this thing the next day. I don't trust it. I'm leaning towards my historical end of August into September short, first week of September. I'm going to be cutting some big shorts here, depending on where this market's at. Not cutting, but entering big shorts here. And hoping for that downside. Now, again, just the deviations, very rare that we go outside +1, -1, okay? You can just look here, center on the weekly, which is the fat dashes right here, but you can see the daily -1, daily -1, daily -1, daily -2, super rare right there. So if we super rare, again, if you look to our left right here, this is daily neon green +2 right there. You see that neon green level right there, right? Very, very, very rare. What happens when we got to that very, very rare halfway point? Well, look at it. Half deviation right here in between +3 and +2. You see that white dash line right there is perfect 50% in between the deviations. It got wiped out. Excuse me. I'm not saying that's going to happen now. We're going to need the CPI numbers, but we are right under this half deviation in between +2 and +1, right? So let's see what happens with that CPI. Just things to keep in mind and remember that RSI in the daily is getting hot. That's something I am watching. So if that print happens and we turn back around, let's start targeting those gaps on the way back down. We are very far away from that 50 SMA daily. And you notice something about that 50 SMA daily when we broke back over. We never actually came back down and tested it, which freaks me out. So I know a bigger drop is coming. Hopefully it's not this late into the year, coming into like September, which that will be my short watch. But shied the 50, shied the 50, shied the 50. Every single one of those dips got bought up above the 50 SMA. And now we are getting a daily hot. So a crack back down to at least the 50. We're looking for it, right? Notice that weekly deviation center. This was the last time it tagged it back here. In March as well. So if you look down there, this deviation tag 313, the last time the weekly hard big white dash line here was hit, also shied away with the 50. So if we get some kind of measure out of tomorrow where we pop and or drop into the week and poof, we're going to chase down those gaps and hopefully chase down that 50, relax a little bit, then head back up, coming into potentially the end of July. And then all of August, and then hopefully we just got to ramp up to that September, because that's going to be something I'm watching very close short. So just a quick recap for Friday to Monday, what we're looking for. We're going to be obviously live and trading the CPI tomorrow, 7:30 a.m. Central, and we will definitely go from there. So we'll catch you guys on the recap for tomorrow, and hopefully have a good big old fat green to show you guys and navigate through. So you guys trade safe. We'll catch you on the next.